My name is Nick B, and let's get into this week's futures overview. So, as always, starting with the Forex Factory economic calendar. Monday, we don't have too much happening. Tuesday is going to be the main event at 8:30. We have core PPI, and at 10 a.m. we have Fed Chair Powell speaks. That's going to be an interesting day. Wednesday, we have core CPI and then core retail sales at 8:30. That's going to be even more interesting. Retail sales as well. Wow, it's going to be busy. Thursday, unemployment claims. The rest is orange label news. And then Friday, we have FOMC member Waller speaks. That's about it in terms of news. All right, so let's take a look at the charts. I'm not going to be focusing too much on the fundamental aspect of this week. I do have a feeling that CPI may come in soft, and what might happen is we end up going higher. I have not seen enough evidence to support that we're really going to crash or pull back or have that continuation of a correction. I see a lot of bears getting excited to short, and that's cool. I get it. It almost seems like a fake pump here, but for us to be bearish, for us to really, really short it here, um, you're going on a whim. You'd have to break the lows of where ES bottomed out at 49.60 and where NQ bottomed out at 17,138, 125. No, excuse me, it's 17,113. That was the exact number. So when we break those lows, cool, we can short it. But to do that here, mm, doesn't feel right, doesn't seem right. Not to mention when you're looking at both equities on the daily, we're above all the moving averages, all the major moving averages. We're going to talk a little bit about the dollar, the fact that yields and JAPI, the yen, are moving in tandem. That's a bit of a prerequisite of us possibly seeing more upside. We'll get there when we get there, but let's focus on the techs. VIX is at 1255. We'll see where it is at Monday, but let's jump into it. Okay, as always, starting with ES, and this may sound repetitive from last week. I most of my structures here got cleared up. I had a really nice channel and the breakdown, but I think I'm going to take a different approach to this week for now, unless I have to draw out the same designs like last week. Most likely I won't. All right, so first and foremost on the weekly, I'm going to blow it up just so I know that if we break the lows, I have an idea where we're going to go. It's going to be 4,800 on ES, and the lows are going to be at 4,960. Now, again, what I know for a fact is above 53.33, we're going to go higher on the weekly, and then below 49.60, we're going to go lower. With that said, I'm just going to isolate this floor here for myself because that's where my certainty lies, where I know either above that level we're going to go higher or below it we're going to go lower. And we're going to narrow down kind of, how we'll shimmy between, these tech zones. Lovely bounce off the 20-day EMA on the weekly. Again, if we do come down, I think, on the daily, a close below 51.56, which is kind of that low end of this weekly candle. Sure, I could definitely see us maybe contesting 50.66 again. Maybe we bounce. But again, that's too broad to say here. We'll have to keep breaking this down. So let's go on over to the daily. And let's identify some of the lower highs that we broke out of. You can't quite see them here just yet. I'm not going to ignore the 20-day EMA on the daily as well. My 20-day exponential moving average tends to serve very, very well as a daily support. So as long as we can tap it and bounce off of it, if we were to pull back, then great. Then there's a chance that this dip will get bought. And then on another breakout of session highs, we're just going to go higher. Okay, so we have a lower high here at 52.84. I'm not going to mark it off. It's a bit sloppy. You have a wick that's wicking up at 53.11. I'm going to leave that alone for now. We have this floor that we broke out of over at 51.56. I would mark it, but again, there's no point. We're kind of in the mid zone of all of this here on the daily, so I can't quite, especially if you have a flat position, I can't quite tell you what it's going to do here just yet. All right, let me break this down now to the 4 hour. get a better idea. Okay, now we have a little bit more definition on, the lower highs that we broke out of and, the higher highs that we've been making, higher lows that we've been making. Cool. 5308, 5285. What was the last tap? 5256. That was our target originally. Off the Fibonacci retracement. Okay, I'm just going to leave this level here for now. And we rejected it. We're coming down to the 20-day. I'm just piecing this all together. I'm still thinking over kind of how Schwab made me panic a little bit. It wasn't letting me get in, but we're good now. 52.27 is going to be that support. I don't like how I can't give you a clear kind of breakdown here right now. 1 second. Let me get rid of this. And let me do the same thing I did last week. I don't know why I'm complicating my life right now. Something that I used to kind of break down the zones for me that was very helpful was the Fibonacci retracement from 53.33 down to the lows of 49.63. It highlighted my main levels that we broke out of, gave me an idea where we could head, and perfectly, we rejected 52.54. Yeah, I should have done the fib first because, again, we're recovering out of a pullback, and I don't want to say it's foolish to target a break of the lower highs here, but you have a little bit of less certainty because when we were breaking out of the areas of 51.23, or especially when we got above 5200, 5214, which was that last lower high right here, I was talking about 5214 for the last 2 weeks. Finally, when we got above it, we had a nice squeeze up towards 5250, and that was a great play there. But looking at this now with a flat position with nothing going on here, it's a bit difficult to determine, okay, what are we going to do? Because I'll be honest, I'm guessing here. If I was to tell you, oh, it's going to bounce off of here or it's going to go here, I don't know. We'll take a look at this right now. And the greatest help I have right now is this fib. Okay. Whoops. All right. Now, if we break above 52.54, the assumption is we're not even going to go to just 52.85. We're going to come up on it. We're going to come up on 53.05, but we know that more or less we have that room to target 53.33. What I'm thinking is I'm still taking a chance. If I was to go long on a break of 52.54, I would put my stop over at 52.20. Ironically, that was our one of our entry longs from last week on ES. I would put my stop at 52.20 and I would target that 53.33 level. But it's not a given considering Tuesday and Wednesday we have big news. We have Powell speaking, PPI, CPI, retail sales numbers. Again, the last thing I want to do is guess. It might not be a bad idea if on the 4-hour we can manage to hold 52.23, maybe bite along, but again, you have the chance that price is going to either go up or down. Now, that's not much of analysis. That's not much of, me telling you what's going to happen. The sentiment is that we're going to go higher, but it hasn't happened yet. So it's kind of up in the air. The only thing I can tell you is we can take stabs, but I think the next kind of level where I would feel a bit safer going long if we can manage to get to it, it's really 53.33. The longer I look at it, the more calmer my mind feels because I know for a fact if I go long on a break of 53.33 and we can hold there, as long as my stop is slightly below 5300, we should be able to have room to come up to 53.50, 53.80, and 5400 would be ultimately my upside target above here. Everything here, I'll be honest, I'm guessing. I am totally guessing. I can deduce probabilities off my 20-day EMA or the previous supports from last week, but, you know, I thought about it, and in a sense, I'd be holding on to last week's convictions. That's not much of a clear-minded approach to kind of this analysis here, so that's why I'm kind of hesitant on that. With that said, let me take a look at this on the 1-hour and kind of see if I can find anything here in between. All right, so the 1-hour is now slightly below the 20-day. We have room to come down to the 50-day, which is over at 52.32. Below that, we could trickle down towards the supports of 5200. Okay, I now have, at least on the intraday scale, a basic idea of what the floor for direction could be here. So right away, I'm going to go ahead and place an alert at 51.95 actually. Why 51.95? I'll explain. 51.95 and 52.64. Yeah, that's fine. What's wrong? Schwab's alerts aren't working? 51.95. All right, Schwab's alerts aren't working. Okay, so I'll just manually point them out, plot them on yellow. Why? I'll explain. 1 second. Let me make it yellow. And then a break of 52.64 would signal to me that we have room now to go higher. And again, we can use momentum to our advantage between here. So we understand when we broke out of this level here of 50% retracement, which was 51.48, it gave us room to come up towards 61.8, which is 51.92. We broke out, we got to 52.26, had a beautiful retest, and the higher lows continued, making higher highs, and now here we are. The next course of action is either we're going to break 52.64, and if I pull this up on the 4-hour, it seems that our next target would be 53.33. Again, my issue is these wicks here of 52.85, 53.08. Those would be the first upside targets if you are to go long on a break of this high here. Now, if we break below the floor of 51.92 ultimately, that's going to signal to me that there could be a chance that we come on down to 51.48. That would be a break of a higher low, and it might signal that trend is about to change. I don't think so. But again, what I think doesn't matter. We'll have to see after the fundamental events, come out what we'll do. I would be inclined to go long on a dip towards 52.23. It was a previous session high, but again, this is just the midpoint of the floor that we've identified. I know for a fact, again, we're between 51.92 and this high of 52.64. So that's with ES. Here it's a gamble. So again, I think I'm going to bite on that long above 52.63. I can calmly target 52.85, 53.08, and then 53.33 if I want to ride that out. I think this kind of a setup here would be more of a swing. You would probably have to weather some intraday, baloney. That's normal though. Or if we break below 51.92, maybe it'd be worthwhile to set a tight stop at 5200 and make an attempt to short down to 5148. That's a possibility too. But again, here, because this move already completed itself with a nice retest and we came up towards session highs, we have to wait, for either a breakout here or a breakdown here. The safer way, where we can kind of ride out that momentum and we know for sure we're going to go higher, is 53.33. I know above that I can definitely target 53.50, 53.80, 5400. But again, I'd be leaving about 100, 120 points on the table. We got to pick and choose. We'll see kind of how the week develops. We'll see how the data gives us a reaction on price action, what kind of reaction we'll get. Again, I'm leaning towards a soft CPI, and that we're going to push higher, but anything goes. We'll have to see kind of what unfolds during the week. And that's kind of the setup that I have for ES. I should have put up this Fibonacci retracement from the get. Makes life so much easier rather than just sitting identifying the lower highs. Even though that's my thing, the reason I choose the Fibonacci retracement here is because for me to nitpick these lower highs and try to target them as targets increases my chance of just 50-50 chances. It's just a guessing game if I was to do that. Here, at least, I have some kind of backup towards the levels that I'm eyeing for a breakout or a breakdown, because we follow this Fibonacci retracement perfectly from these lows here, and we're here now. So it should be able to serve us well into the week. With that said, that's with a yes. So again, either 52.64 or 51. 51.92. Let's keep it the 61.8 retracement on ES. Here, it's dead man zone. There's nothing. I mean, there's nothing here. There's nothing. Maybe you can take a bite on the midpoint of 52.23, but for me, looking at it, your odds are 50-50 in that channel. So I would personally avoid that. Moving on to NQ, and we're gonna do the same thing like we did with ES. I'm gonna fib it. Makes life much easier. All right, let's put this on the 3-year weekly. Same thing. Let me see. I wanted to plot this out, but no need. We just need to identify the floor that we're in between. And the floor is 17,120 and 18,709. So I'm looking for not certainties, but I'm looking for facts. What do I know for a fact? So below the lows of 17, it's really 17,113. Below there, I know for a fact we'll have that room to come on down towards 16. I want to say 16,850 first, and then we'll come down towards maybe the 50-day EMA of 16,500. That could be a stretch. Or I know for a fact above 18,709, we're going to go to 19,000. It's going to be 18.8, 18.9, and then 19K. NQ also on the intraday likes to favor 50-point increment moves, but again, above 18,709, as long as we can hold that, I know we're going to be going higher. Let me go ahead and change the color up yellow. Those are going to be my direction SNLs. And we're going to break this down to the daily. Real quick, I want to point out again, the 20-day on the weekly is over at 17,686. If we have some horror news or something, along with CPI where the Fed says we're not going to cut those rates and there's a spook and we pull back down towards 17,686, as long as we can hold above that level for the week, as long as this week we can close above 17,700, we should be good for a bounce. We should be good until we can recover the session highs of 18,350 again. I don't think that's the case. I think at most maybe we see maybe a mini pullback and then we're going to go higher. But again, I don't want to put my bias ahead of the analysis. So let's go ahead and break this down to the daily. Same thing. We broke previous lower highs, got above them. But again, we're kind of, because the move already completed itself also on the daily, this doesn't exactly look very strong to me, all these wicks on these candles. But, we're in no man's land here. So we'll have to fib this, and I'll go ahead and do that on the 4-hour rather than the daily, because the 4-hour gives me a better visualization of kind of where our lower highs and higher lows and lower lows are. All right, so starting at 18,709, pull this down to 17,113. Perfect. Let me just change this around purple. Perfect. Wonderful. And we have a beautiful kind of breakdown with this Fibonacci from that high to the low that we made here. And we've perfectly retraced through these levels here, currently sitting above 61.8, giving us potential to reach 18,367. Really, my breakout is going to be at 18,355, and we can easily target, I think, 18,500 to the upside. But let's talk about this, right? Okay. I'm going to go ahead and plot, oops, I didn't mean to do that. Let me plot a support level here, 18,350, similar setup to ES. This is going to be my breakout point for upside, for more upside. And then my downside alert is going to be over at really 18,100. 18,100 served very, very well for us into last week as support. We held it as long as we were above it. Price just took us higher. So I'll rely on that. Okay. Similarly, again, on the 4-hour, our 20-day is over at 18,190. If we dip below it, great. Maybe we see 18,1. And then again, if we slash below 18,1, that's going to give us room to come down to 17,900. Possibly if that fails to hold around the 200 EMA around this area, we'll see more downside. I'm not leaning that way for the simple fact that you have the 20 crossed over, you have now the 50 over the 100 and 200, and now you have an attempt on the 100 to get above the 200, all in linear order. So to me, that's just propping up probabilities that, hey, price action and trend could continue higher here. Okay. A break of 18,350, I'm probably going to bite on that long. I can't think of you know 18,300 I think is too tight of a stop. You would have to swing at this a little bit wider, a little bit safer, maybe at 18.2. So let's see, 350, you're risking 150 points for another 150. I'll have to weigh those odds out in the moment. If I can tighten that stop and trail it along on the breakout and momentum helps us push, great. But again, that outlier of CPI, PPI, retail sales, and Fed, I'm going to leave this alone for now. All I know is for sure, though, at least, that between this floor of 18.1 and 18,367, you can't really pick what you're going to do. It's either you're going to break those session highs and you're going to have that juice to come back up towards 18.5. That's going to be my first target on NQ to the upside, or we're going to spill below this 20-day. That's going to give us room to come down to 18.1. And if 18.1 fails to hold, we're gonna continue going lower. 18.2 on NQ served as a very, very good support last week. There were quite a few, quite a few instances where for a few days we could not close above 18.2, but that one day when we finally closed above 18.2, we had longs into the overnight and into the morning session. They ultimately got squeezed higher because price action was just supporting more upside potential. And it seems like it's doing it here too. But again, if you're flat and you have nothing to do here, you're risking, you're at a 50-50 probability it's going to go in either or direction. We don't want that. We want a little bit more certainty to these moves. With that said, let me take a look at this on the 1 hour. Okay, so we're below the 20-day. That's fine. Above 18 to 70, there could be room to come up to 18,350. But again, where are you going to place your stop? Your safest support is at 18.1. 18.2 is a nice threshold, but I feel like that would be way too easy to get stopped out here. So again, that just kind of reinforces the idea that if you want to go long, you got to get above these session highs, or if you're going to short, you got to short it on a break of the lows. Everything here is either or, and I'm not in the game of guessing. So, with that said, that's what we're looking at on NQ. So 18.5 is going to be that first target. If we could get above 18.5, this is a dangerous area that I've been eyeing also for the last few weeks, and I'm going to be very cautious when we get there. That's going to be the areas of 18.5 to 18.630. It seems like it's going to be a very tough channel to kind of maneuver in on the intraday unless we just have one nice candle that rips us right through that zone, gets us to 18,709. There may be a lot of profit taking at 18,709. Maybe we see a pullback to 18.6, 18.5. And as long as 18.5 can hold that support into the future, I think we should have no issue to attempt to retake 18,709. A break of 18,709, we are definitely going long there with a stop at 18. I would put it at 18,630 because we'd be risking roughly 70 points to ultimately try to swing 200 points at a minimum to the upside, because it's going to be round number the fact of round number theory when we get a break of 18,709, because that's going to be new price discovery. That's also what I'm thinking of in terms of on ES. If we break above 18,709, 18,8, 18,9, 19,000 would probably be the targets up there, similar to ES. With that said, I mean, it's as simple as it gets here. There's nothing less, nothing more to it. The only outlier that we have to be careful of into this week again is just the news. And again, I have that bias that we do well, and it's just there's a lot of things pointing to more upside, such as the dollar, the yields, and the yields moving in tandem, lower. I don't understand why people want to short this out there. Maybe, maybe, but it's not ready. We'll have to see when we get there. Other than that, let me take a look at the dollar really quick. Oops. All right, let's take a look at this. Ultimately, we needed the dollar below 105. We're chilling at 105.31. That was a previous gap to fill from from a few days ago. I'll have to find that. That said, let me blow this up to okay. I want to try something different. Let me try from the lows to the highs. Very, very interesting. Okay. I took a shot in the dark and it kind of makes sense. Here's what I mean by that. The fib from the lows of 89.53 to the highs, we have our point of 38.2, which is one of those golden levels below 38.2, gives us room to come down towards 50% retracement, which is over at 102.14. Below 102.14, we should have room to, well, this is a bit tough, 99.16. That might be rough, but we'll see. The fact that we're holding 38.2 at the moment gives us risk that we may see the areas of 106.50 again, and above 106.50 we could have room to retrace towards 107.31. But again, with the way yields are moving here, I can't say that's going to happen. I honestly think and foresee that the dollar is going to nuke, especially after CPI. But like I said, I'm not a fortune teller. We'll have to see the reaction. We'll have to see kind of the numbers come out, and we'll go from there. The dollar going lower definitely is going to help equities boost higher, and the dollar going higher, we're going to see some fight back on equities, and in turn, we might be going lower. On a side note, something that kind of is also helping me reinforce these bullish convictions is the nostalgic feeling of 2020. All of a sudden, for the last 3 weeks, I've been paying attention to the names such as GME, NIO, Blink, PLTR. What else we have? We had AMC. These names, I'm slowly but surely starting to see some kind of activity and interest pick up in them. Very interesting. Just a note, just a side note. I'm just saying. Um, with that said, I mean, let's see how this week unfolds. I can't wait to go long. Definitely, I'm just a perma bull. I can't shake that. Um, any and all dips, I'd love to nibble on those, longs there because I think that, making higher highs and higher lows like we are here feels, again, very, very 2020-ish. We're breaking above previous lower highs. You could see that. And as long as we can sustain above these lower highs, that just is going to reinforce the idea that price can and will go higher. With that said, that is all she wrote. I hope you have a great and a solid trading week ahead, and we'll see what we get. Cheers.